What's up, guys? It's November 14th, 2024. Had a broad bear channel today. I have to admit, I had a harder time trading today. First red day for me this month. Yeah, so here we are on the daily chart. We have a bull rally. And we have a bear channel starting on the 11th. We broke that here. So here's the leg one move. Put it to the high of the pullback. Bears want that to be met, and then here, and so on and so forth. Their target's going to be the breakout points. They're almost to the high of the 6th. That was a really strong rally. You see it on the 45-minute chart better. So the 6th is right here. It's around here. And yeah, they're almost there actually, very close. Bulls obviously want this to be a second leg trap so they can buy it and go higher. Something to keep in mind is when we're watching the charts, is the EMA moving into the price or is the price moving into the EMA? That'll tell you kind of what that just, I don't know, I paid attention to it, it helps me a lot. You know, when the EMA is moving into the price, that means the fair value is higher. Excuse me one second. When price is moving into the EMA, in this situation, that means the fair value would be lower. So at this exact moment, it looks like price is moving into the EMA. We were extended off this rally, a 50% pullback is right around the high of October 30th. Kind of what we're looking at right now. Also, yeah, the EMA is just above that, so 33% would be like around here, the high of the 6th. I appreciate all you guys always tuning in. I think we're all going to be very strong traders. I know Trader Chick's in, there's some new people in here. You guys are going to be great traders. It's going to be sick. Yesterday, we had or 2 days ago, we had a rally, deep pullback rally. Looks like we're starting to get a second leg from this whole bear moves. So why it's really important, I think, to focus on the markets through one lens. What I mean by that is just consistently, like, so what I just shown right here, leg one, pullback, leg two, is the same way I trade these little bars. Today I got cut up, but leg one, pullback, you know, something like that, leg two, leg one, pullback, leg two, because price action is fractal. Leg one, this was a wedge top, pullback, leg two, leg one, pullback, leg two, pullback, leg three. We're gonna talk a little bit about entry criteria. And if you want the honest truth, I don't even think entry criteria matters. What really matters to me is reading the markets from a consistent viewpoint. So for me, it's leg one, leg two. Is this breakout strong enough to get a second piece? Is this reversal strong enough to get a second piece? So let me draw what I just said. Is this breakout here strong enough to get a second piece? Yeah, it is. But then look at this rally from from 11 to 15. So now this is becoming a pullback. Is this pullback strong to get a second piece? Yeah, it is. And it got that pullback here. The pullback went above by like barely one tick. If it doesn't go above by one tick, then the second leg fails. And then look, so is this price action strong to get a second piece? Yeah, it got its second piece here. We went lower by one tick. Is this pullback strong to get a second piece? Yeah. So that's how and then I base my entries around that. In trading ranges, I'm expecting a deeper pullback. I'm going to expect a delayed second leg. In a trend, I'm looking for quicker. Like here, look at these 3 bars. 1, 2, 3. Okay. This is starting to be a reversal. What's a reversal? It's a form of a breakout. So you could say it's trending. Look, and look how shallow the first pullback was. On a smaller time frame, leg one, pullback. I mean, not even a smaller time frame. That's the time frame right here. One more second. Let me clear my throat. I ate a lot of Sour Patch Kids today. Here it is again. Leg one, pull back, leg two. Now we're in a trading range, right? We had a big down, big up, big down. So we can have deeper pullbacks. And then look at this rally and look at this pullback. So I want you to compare the pullbacks. Actually, let me scrunch the screen up. Scrunch the screen up. So here, it's a breakout. A reversal is a form of a breakout, and I'm not saying to buy reversals. I actually was looking for reversals today, and that's what messed me up. I don't know what got into me thinking the market was going to reverse. I'm a wick trend trader, so I stopped trading very early today and just realized like, hey, my head's not right. This is the first time I think in a long time I took 4 losses in a row. No, their losses were no more than 6 points, but nonetheless, I just kind of foobarred the day for some reason. Cat's still green, still breathing. Just don't really. It's just, I guess, old habits die hard. Anyways, so here's this reversal. See how it's a shallow pullback 47. Now look here, we're in a training range, right? Down, up, and then look at this reversal here. So like one deep pullback, 26, 27, rally. You could say this is a deep pullback. It went to the 50% level and then it rallied. That was bad. Here. So we're in a trading range, right? Trading range. Actually, where's the trend? Okay, here's a bull trend. Breakout. And we're trending. Look at all these pullbacks are very shallow. We're in a trending environment. In trending environments, gaps stay open, and in trading range environments, gaps get closed. So all these two-legged pullbacks are shallow. Leg one, pullback. So this bar got its own pullback. Leg one, pullback, leg two. Leg one, pullback, leg two. And then you could say this whole price action here is also a form of a wedge bottom. But it's very shallow pullbacks. And then look at today's bear trend, right? We're in a trading range. Big down, big up, big down, big up. Look how crazy, how delayed these pullbacks are. So we have a leg one, pullback, leg two. And let's put a timer to this. It's almost 1 hour before the market actually got its second piece here. Whereas here was literally 5 minutes and it got second piece. Here, where was that trend? Here, you could say here, 35 minutes, and then look at this again, right? 10-minute pullback here, 5-minute pullback, 5-minute pullback. Okay, this is a longer pullback, 1 hour, but we're at the third leg. What happens in the third leg? We're in a trading range. So when I'm looking for entries, I'm thinking, are we in a trend or trading range? If we're in a trading range, I'm going to expect a delayed pullback, and it's going to be deep. It's going to be deep. It's going to be delayed. 1 hour, 20 minutes. This is strong enough to get its own second leg start. So let's say the rally starts here. You could even argue this is a pullback. Leg one, pullback leg two, because we traveled 1 tick below. If you're looking for a bigger piece, I generally do. But then that rally took almost 2 hours. That pullback almost took 2 hours. And it was a super deep pullback for the bulls. So we're in a trading range. We're in a trading range. Bulls get the second leg for this. Where's the second leg? Where's the second leg start? Here? No, it's delayed and it's deep. The second leg was 100% pullback. And 1-to-1 was met here, which also formed a wedge top. That got bulls to sell out, which is enough selling pressure to give this whole piece its second leg. Here's a shallow pullback, but it's also late in the day. Leg one, pullback, leg two, pullback, leg three. Because the question was asked, how do I go about my entries? So when I say I'm loose with the entries, I am pretty loose with my entries. I like to think I trade small. Sometimes I go on tilt and trade a little bit bigger than I should. But generally, if you trade small and you short here, you get short maybe on this bar. You say leg one, pull back, and you short here, here, here. You can scalp out, or you could hold to this leg and look at the overlap between bars 20 through 26. A lot of overlap. Bear gaps are staying open. Here's a bear gap. Here's a bear gap that gets closed. Another gap gets put in right here, and then another gap. So gaps are important. I really use gaps to gauge the context, and then I look at the strength of the breakout within the gap. So in trending environments, gaps stay open. In trading range environments, gaps get closed. So that's kind of how I do my entries, and I do want to get more precise with them. I'm working on it. I'm doing a little study on my own about pullbacks. Well, I'm going to start it this weekend and just kind of figure out just how to be a little more precise, because I'm the guy who shorts here. I'm the guy who's taking these shorts, or I'd rather be the guy who shorts this bar and adds on the way down and scalps out 1 or 2 ticks below here. So it'll take time. I'm red today, first red day of the month. I'm kind of upset about it. I was gunning for a 60 to 70% win rate, and taking 4 red trades in a row puts my win rate at 50%. We still have half the month to go, and I do fully think I'm going to bump that back up to around 60. I was sitting at 62% before today. You can be profitable at 40%. I'm looking to get to 70 to 80% by the end of next year. I keep my stats on TradeZilla. I'll probably share that within Discord once I have more months packed away. So we talked a lot about that. I'm going to go a little bit quicker with this. We had a broad bear channel. Again, we're pulling back on the daily chart, but I think this bar is strong enough to get its own second leg, right? So if we're in a trading range, where is that second leg coming from? It could come from here, it could come from the EMA, it could come from down here. That's a big sell. I'm not saying we're going to get one big bar. What I am saying is this bar closed on its low. It's a trend bar. I think it's strong enough to get its own second piece, and that'll put us around the 50% mark, actually. Around 5,900 is a nice even number too. So broad bear channel, we're expanding. End of the day at a new low. Not the most bar. Wow, bar 1 was the high of the day, and we ended on the low. That's 2 uncommon things. That's kind of crazy. I just went before. I think I said it 3 times already, so this is my last time. I did have a hard day today, so take it how you want. Anyways, I shorted here, I got trapped, and then I got out here, and then I bought here, I got trapped. I bought here one more time. Oh, no. I sold here, I got out here. I bought this bar, I got out here. And then I went short, got out, went long, got out on 21.22, and I said, screw it. I can't remember the last time I did something like that, and that just means that's not good for me. I definitely do think I could have made it back, but I just got so mad at myself that I just said I'm done trading. I sat there and watched the markets with the homies, but that put me in that pissed me off, to be completely honest with you. I don't know why. Yeah, it was a hard day. And then anyways, the day got made up. It was really good legs after that. So I hope you guys capitalized. Just talk about these bars real quick. We're 12 minutes kind of flew by. One second, I got a text. Believe it or not. It's just talking about something, the garbage. So leg 1, strong to get its own second leg, pull back. Leg 2, once we go 1 tick past the prior low, leg 2 is met. And then we get a rally. Is this strong to get its own second leg? Yeah. So leg 1, deep pullback. Leg 2, second leg's barely met. Bar 27. I think 27 is a great sell signal. So leg 1, pullback. Leg 2, wedge top. Bulls get trapped buying this high, and we know they got trapped because we can see the tail on 27. So the market rallied and then reversed lower. They didn't have too much time. If we go to a smaller time frame, we can actually see exactly when the bulls went underwater. I gotta update this because I want to look at the 100-second chart. I don't care for the 1-minute chart. So the bulls that bought whatever bar number. Oh my gosh, my throat. The bulls that bought whatever bar number. Okay, let's go back real quick. So we're looking at 27. So at 840 is when the bar starts. So 840. So the bar starts here at bar 131. This is the bar that starts the 5-minute candle. So this bar is the start of the 5-minute candle. They buy this high. They sit through a pullback. It rallies for 1 minute, and then they have about a 30-second rally here. So buy here, 1, 2, 30 seconds. They had 2.5 minutes of profits. Maybe had 2.5. I bet, because if we go down on a smaller time frame, this is also its own second leg. So at most, they were at profits for 2 minutes and 30 seconds. And then they got shut down. They had no real opportunity unless they held down here and bought. So I think that was strong enough pressure to create this second leg. Bar 30 is an opposite bar, creating a leg 1, leg 2 within a major leg 1, leg 2. So leg 1, pull back, leg 2. Leg 1, pull back, leg 2, pull back, leg 3. Bar 40 is a vacuum. We rally. We got a macro channel against the bear channel, so we're officially in a range bound. When we have two microchannels against each other, you have to think range bound, no matter what. Please. Even here we had the rally. I mean, excuse me. We had, well, a rally, a rally like bears. You could say bears rally. That makes that the verbiage that makes sense, but people don't talk like that in the market. So bears sold off, bulls rallied. So we have a sell and a rally, puts us in a trading range. We have a breakout, super deep pullback. Bulls go for the reversal. They want to get here, here, new high of the day. It fails again. And the concept that we looked at right here happened right here too for the bulls that bought 45. However, they did have an opportunity to get out on 47. And then that creates a leg one, pullback leg two, right into the second leg here. Strong bar puts us in that range, right? Buy low, sell high. Leg one, pullback. Man, my throat is weird. Leg one, pullback leg two, pullback leg three, wedge top. Try and play around with this because this is that happens pretty much everywhere that gets trapped. That's how traders get trapped. Get trapped here. It's strong enough for its own second leg one, pullback leg two, pullback leg three, wedge bottom. Market opens in 15 minutes, so it'll be interesting to see. Let me go over some trade. Let me mark out the trades and then I'm getting cut up because I'm asking for too much. I've really gotta go back and do some homework with my laundry. It's just finished. I gotta go back and do some homework with my laundry. No, I just gotta go back and rework my targets. I gotta talk to the mentor. Whenever I have winning days, I get greedy and keep extending my PTs, and then a day like this snaps me back into place. So I have some words with the homie. So here, we have 3-bar micro channel. Put it above the pullback. That's met. Wow, to the tick right here. You can measure this. Put it to the high of here. That's met. You can measure these 3 bars. Put it to the high here. 1.5 R is met. Here, obviously we know 1.5 R is not met. We're in a trading range. Trading range is shallow, so 1.5 R is not met. Then we want to get this can get its own second leg because it's strong enough. Put it at 66. 1.5 R is not met, but 1 R is met. And then I'm gonna move that a little bit to the side so it doesn't get too confusing. Then this, obviously we don't get 1.5 R, but we're just to keep it because some continuity. Put that here, put it at the pullback. And 1 R is not met. Oh yeah, look at the rally back into the EMA. Let's go over the gaps real quick. We're pushing 20 minutes. I try not to keep them too long. I know you guys are busy, and I do appreciate you guys that make it this far in the video. I really do. So thank you. Just draw these gaps in real quick for practice, because what happens in gaps when we're in trend, gaps stay open. We're in trading range, gaps get closed. So this gap got closed right away. Stays open. Oh, that gap gets closed. This gap stays open. Oh yeah, this gap actually stayed open all day. See, trending environment. See, I don't know what happened today, guys. I really don't know how I fell apart. I'm quite annoyed with myself. I have this whiteboard that I keep next to me, and it says days followed the system, and I was at 3. Now I have to reset it, and I really just want to see 100 next year. That's one of I have a couple New Year's resolutions. I usually don't have New Year's resolutions, but I do now, and it's going to be pretty cool. One of them is, I'll share it with you guys when it happens. So yeah, there are the gaps. Let me just do this one nicely. One of my New Year's resolutions is to read at least 1 book a month, and I'm going to do another YouTube channel. I'll call it the Self-Help Book Breakdowns and just do book reviews on that, because I'm turning into a bookworm the older I get. Book reading with a glass of wine is a low-key vibe. Anyways, there's the gap, guys. Let me know for the homie who asked about trade entries if that clears things up or if I made it more confusing. Trading ranges, shallow pullbacks. Wow, okay, yeah, no. Trending environments, shallow pullbacks, trading ranges, deep pullbacks, delayed second legs. And that's the gist of it. Is this breakout strong to get a second leg? Hope you guys are doing good. Hope you guys had a good day. Hope you guys had a better day than I did. If you learned something, share the show. Don't be a hoe. Have a good weekend. I'm going to be at work tomorrow, so this review will get posted a little bit later. And I will talk to you guys later. Have a good one, guys. Thank you for your time. Bye.